Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined by Steve Gutterman. He's the CEO of Gryphon Digital Mining. A very exciting interview as Gryphon has come out with a plethora of press releases and news items over the last few weeks that we want to get Steve's opinion on. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of Gryphon, your thoughts on this company compared to their peers, and outlook for 2025. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, the CEO of Gryphon Mining, Steve Gutterman, back in action on the podcast. A very exciting interview here as Gryphon has come out with a flurry of press releases over the last few weeks. Steve, thanks so much for making the time and Happy New Year.
Happy New Year. Thanks for having me. Always a pleasure to talk to you.
Happy New Year, Steve. Let's just start off by just talking through one of the big changes that happened towards the end of 2024, which was the movement of your miners from core mint to this new contract with Block Fusion. Can you talk us through that process? How long it took? Was there any major disruption during that period?
Yeah.
Did it affect production, etc.?
Yeah, look, CoinMint was a good partner for us, and we're pleased with the relationship and with the transition. They were moving in a different direction, and in addition, our contract was a rev share. And in an environment where Bitcoin prices continue to go up, I think I saw 107 this morning. You don't want a rev share, and so we moved actually to two places: Block Fusion, which is also in upstate New York, and then Mawson, which is in Pennsylvania. So far, so good with both of them. They've been great partners so far. We're eager to get in there and expand the relationship. And so in contrast to the CoinMint deal, those are both fixed prices. And so that's going to be, over the next year, we believe, more advantageous and certainly more predictable for us as we move forward.
Yeah, awesome. Does it give them obviously two locations? Does it give any scope to increase hash rate at any of those locations? And if it does, what impact does that have to your fixed price? Is it just a linear increase in energy costs?
Yeah, that's about right. And the other piece is that with Block Fusion, what we've seen in January, and we would have seen this at CoinMint also, and really every operator in New York is seeing some curtailment, more curtailment than we'd want to see, given the polar vortex and the extreme cold and the amount of power that has taken off the grid to warm New York City. So I think that all miners who are in New York at all, probably a lot of places on the East Coast, are going to be battling. I wouldn't be surprised, Anthony, as you talk to the whole cohort, if you're hearing similar things across the board in January.
Yeah, exciting time, Steve. You make reference to the Bitcoin price as well, shooting up. Obviously, inauguration day in the United States today. So we'll come on to some of those details in a second here, but I wanted to touch on just the sequencing of the press releases. So in the months of December and January, probably as many news releases from Gryphon as we saw in the entire year prior. So just curious, you've obviously been very busy over the holidays. Was there any sort of strategy as towards the timing, the sequencing of this, and then we can get into some of the specifics of the press releases?
Yeah, well, look, as you know, I became CEO in the fourth quarter, and we really identified several key strategic initiatives, and we have been moving with alacrity to execute them. And so our first and most important thing, and we talked about this on a prior call, is that we needed to strengthen our balance sheet. We did that right away. And we now have a great partner in Anchorage Digital that is our largest shareholder. Very pleased to have gotten that loan restructuring done. After we cleaned up our balance sheet, we identified that we really needed to lock down marquee power assets because, as you know, in this industry, power is the name of the game. And what really it differentiates and will differentiate companies is their access to great power sites. And that's true in mining and in AI computing. And so we move quickly to, number one, scour the continent for flagship assets, and then number two, lock them down when we found them.
So in terms of the deal with Ericsson National Energy, talk us through what that means. I mean, 100 megawatts of power there. Talk us about how you the growth into that 100 megawatts. I mean, at the moment you're operating, like I say, those two hosted contracts, and this now is a significant amount of power available. What's it going to be used for? And can you talk us through the timeline of the growth of utilizing that power?
Yeah. Well, first we need to complete the due diligence of that asset, and part of the due diligence is making sure that we feel comfortable with the regulatory relationships and contractual obligations that we would inherit by closing that asset. I would note that the regulatory bodies that we have been working with have been great. And so we continue to collaborate with them, and we anticipate a fairly swift resolution to all of the outstanding issues. When that happens, we'll complete the close of that asset. And as we've talked about, having access to 100 megawatts, and ultimately we could go as far as a gigawatt, but let's stick to 100 megawatts. Having 100 megawatts at sub 1 cent power, and then it's sub 3 cents, even if you amortize the cost of the equipment, having access to power that cheap really changes the game and gives you so much flexibility with respect to how you'd want to populate that site with machines. So if you are talking about 6.5, 7.5 cents per kilowatt hour, then really the only machines that are going to make sense are 21s, right? Or the latest model. But if you're talking about sub 1 cent power, all of a sudden that's a different dynamic, and you have much more flexibility to bargain hunt on last year's machines. And so we've talked about this before also. We want to be bold when it comes to the acquisition of our power assets, and then scrappy and super capital efficient when it comes to buying, acquiring, and then deploying machines. And then sorry. And then I think you also asked about the timing. So let me hit on that. If we get through the regulatory process and the diligence process in a reasonable frame, which I hope and believe that we will, then we could have up to 100 megawatts up and running by the end of the year, potentially earlier. We could have something like 20 to 30 megawatts by the end of Q3, growing to 90 to 100 by the end of the year. Again, those are the timelines if we come to resolution on the outstanding items necessary to close. If it takes us a little bit longer to kind of nail all those pieces down, if it takes us a month longer, those timelines slip by a month, etc.
So in terms of that site, are we talking about power already available? There's no requirement to order these long lead items that miners have talked about in their updates, where they're taking 18 months, 2 years to bring in the power items. So, one of your peer miners is talking about 26, 27 when they're going to deliver their next site, because it does take a long time. This comes with effectively power available in a far quicker time.
No. Actually, just to be clear, it doesn't. We will need to add the generators and the containers. We believe that we've located them. And look, I think some of the people that you're talking to are trying to figure out how to put 200, 300, 500 megawatts online. We're not trying to do that, at least up front. So the amount of generators that we'll need and the amount of containers that we'll need is less. We don't think
more
that's
manageable.
Yeah, it's manageable. So we don't think that's going to be a gating issue.
Steve, another really exciting one we saw, and this one kind of hits close to home as I'm from Calgary, Alberta, but you announced a big Captus energy deal, so an 850-acre industrial site in southern Alberta. This one, again, has the potential to scale up to 4 gigawatts mentioned in the press release. So curious, again, to get your thoughts here. It sounds more HPC AI focused at this location.
That's right. And so let's set the stage a little bit. Number one, I think that we all would agree that AI computing is important now, and it's going to be more and more important over the next 5, 10, 15, 20 years. As a matter of fact, I might go so far as to say that the AI revolution is perhaps the most fundamental industry revolution, technology revolution since the industrial one, right? I mean, we're talking, I don't think it's hyperbolic to say that it's that fundamental a shift. And so when you talk to energy experts, they believe that we collectively will need somewhere in the neighborhood of 75 to 100 gigawatts of incremental power to power AI. And that's a lot, right? That's the equivalent to, all of the US households. So it's a lot of power. And the reason I bring that up is that we don't believe that there will be one source of power, right? There will be some nuclear power, although that faces massive political and bureaucratic pushback. There will be some geothermal, solar, wind, although people have a hard time scaling those. We believe that the best solution, generally speaking, for this incremental power is natural gas. Right? Natural gas is a very low-tech, proven solution to a high-tech problem. And so we spent 2 months scouring the continent looking for a site that, to your point, has more than just cheap power. That's really what you're looking for with mining. For AI, you're looking for more, right? You're looking for cheap power that is also redundant, because in an AI environment, you can't be up 92% of the time, right? You got to be up 99.9 with 6 nines, right? So redundant, scalable, flexible, connectivity to fiber, proximity to an urban center, willing local government partner, non-potable water that you can use for your project. And if you're doing natural gas, you also want on-site carbon sequestration, because that eliminates your carbon transportation costs. It eliminates having to pay carbon taxes, and it also turns your project green, right? And so if you have all of those as your criteria, what we found is that there's not very many sites in North America that meet all of those criteria. So we are delighted that through all of our hard work and all of our connections, we were able to find the Captus asset. And as an added bonus, that asset comes with Harry Anderson and his team. Harry's the former COO of Pembina Pipeline, which is one of Canada's biggest energy companies, $25 billion market cap. So we've got this incredible asset that checks all of the boxes in a way that only a handful of places in North America do, with perhaps the preeminent energy team to guide its development. So we really couldn't be more excited about the future with that asset. And as you said, we have the potential to scale up to 4 gigawatts there. Now, that would take a massive amount of money and development. And so we'll be doing that in stages, and we'll see how that plays out. The potential, though, for that Captus site is incredible.
I mean, you mentioned that's what one question probably on the end of everyone's lips at the moment is about funding, and all these projects, and we're not talking small; these are significant projects individually. What sorts of funding levers are going to be available to you over this next period now? I mean, I know you've recently paid the figure for the project up in Alberta. to start that process off for the land. But in terms of developing this now, and Bryce and myself, we've been fortunate to. I've been to 3 separate facilities from some of the peer miners, and the costs of these sites are just significant. What funding levers have you got available? And is this more looking towards maybe partnering, like other Saloon is a good example of a peer miner that they haven't got the access to big funding. What they do is they go and find funding partners and then do some sort of deals that way. What's your take on how you see this year through, with what levers are available to you to progress some of these projects?
Right. Let me say 2 things. Number one, the funding needs, though significant, are much less daunting than they first appear, because most of the projects that we are talking about with Ericsson and with Captus are great candidates for project financing, and from traditional lenders, from governmental sources. So we believe that really up to 70 or 80% of all of the projects can be financed. Still, to your point, that leaves 20 to 30% of a big number. And so that's going to be a lot of money that we're going to have to raise over the next couple of years. And this is why we're really excited to be in the position that we are in. We're a NASDAQ listed company. We've got a $70 million shelf. We've got an incredible board and investor group and management team that have deep experience in raising billions of dollars and in building billion-dollar companies. And so my experience as somebody who has been active in about $3 billion of capital raises is that if you have the right vehicle, which we have, you have the right team, which we have, and you have the right asset, the funding is, look, you got to work for it, but it really takes care of itself.
Yeah.
Hey, one quick follow-up on that. You talk about the strength of the board and the team. We also saw a press release in relation to Eric Gallie as SVP of Energy Strategy. So we assume, Steve, that this all works together with these new developments and press releases. But can you talk to us about what Eric brings to the team as well?
Oh, yeah. Eric is great. And he brings a rich 18-year history in energy development. And then also his last gig, he was at a hedge fund where he was trading energy stocks. So he just really knows every part of the energy business. And interestingly enough, I'm glad you brought him up. When we started looking at the Captus asset, he said, I love that asset so much that if you're able to acquire it, I'm coming aboard. And I'm going to quit my job and join you guys. And I said, great. That sounds like a perfect fit. So we're delighted to have him.
A package deal then, eh, Steve?
Right. That's right.
Steve, in terms of hash rate, we know that you're currently operating just about another 1 exahash in terms of hash rate. What's your sort of like plan in the short, medium, long term for this year in terms of any hash rate growth or any? We're seeing other miners also having to sort of refresh their fleets because we know for these mining machines don't last forever. Is that something you're conscious of? And any sort of color you can add to that would be helpful for shareholders.
Very conscious. I don't want to peg a hash rate right now because we're in the process of really determining how aggressive we want to be. Obviously, if and when we acquire Ericsson, we'll have a need to put about 30,000 machines onto that facility. As you know, we have about 8,500 right now. And what I would say is that we are going to be very aggressive, also scrappy and capital efficient when it comes to acquiring machines and increasing our hash rate over the course of the year. I also do want to note one thing, though. We really like the Bitcoin mining business. And we also believe that it's not a 5-year, 10-year, 15-year business, right? 20 of the 21 million Bitcoins that will be mined have already been mined. So that million's still a lot for us, right? We did 17 a month last month. So that's a million still a lot, but it's not a forever thing. And so we really view our mining revenue as a bridge to our AI revenue that's going to take a little longer to develop. So when you think about it that way, we wouldn't want to spend the $100 million that it would be required to buy 21s to populate Ericsson, right? That's not the most efficient use of capital. So I bring that up only to say, yes, we will be increasing our hash rate. And I believe that we will have opportunities to do that significantly, even though I don't want to peg a number right now. And as we do it, we're going to be mindful of the fact that we really want our most significant CapEx expenditures to come in AI rather than buying machines.
You lead to a good question, actually. It's just literally just come to me now. I mean, in terms of, would you ever contemplate using any of your facilities in the future for hosting? Because we're seeing some miners. I mean, when I started in this space 5 years ago, most of the miners were doing hosting, and then they moved out of it because it wasn't profitable. But there are a few miners out there that are still prevalent miners out there that are still hosting and still running very profitable businesses, especially when it comes around to the bear cycle, because you are getting predictable revenues on a monthly basis. And is it something you're even considering, or you think actually, we're focused so much on on what we've got at the moment in terms of self-mining, but we're also heavily focused now and forward on the HPC AI. But is hosting a conversation you're even thinking about?
Yeah, absolutely. And as a matter of fact, we've fielded a couple of inbound inquiries on the new facilities, and so we'll absolutely look at it. It's a math problem, right?
Yeah.
At the end of the day,
I mean, with your energy prices, if you can get those energy prices you're quoting in the updates, like you say, it doesn't really matter as much as what fleet efficiency you're using in those energy prices. I'm putting out an article the next day or so about this particular topic, and I've ran the numbers against the big miners. One of the miners, has the lowest fleet efficiency and one of the cheapest energy costs. So it's a tick box. But even if they reduce their fleet efficiency significantly, it still gives them great margin. So I've done the analysis on this already. So you're quite right in what you say. If you've got that energy price, and if what you're quoting there is pretty much as low as I've seen in the marketplace at the moment. So credit to you guys for getting access to that power. Hopefully we can see it being utilised and those results coming through to back it up in the near future. But no, really good to hear that.
Steve, great discussion today. I know we've covered a lot of press releases, some new hires at the team, and the 2025 strategy. I just wanted to kick it back to you for any closing thoughts, and thank you for the time today.
Oh, well, thank you. Look, we're very excited about the things that we've done. We're excited about how we've positioned ourselves for this year. I think it's going to be a great year. It's also going to be a very interesting year for everybody that does mining, everybody that does AI. And we're excited to be a part of that. So thanks for having me on, guys. Look forward to our next conversation.
Great. Thanks so much, guys. We'll see you tomorrow.